Economic chaos does not usually announce itself politely. It builds quietly. Debt expands. Political divisions widen. Asset bubbles inflate. Technology reshapes industries faster than institutions can adapt. And then one day, what felt stable begins to crack. Peter Thiel has spent decades thinking about that moment, not from the perspective of fear, but from the perspective of positioning. Peter Thiel is not just another billionaire investor offering macro commentary. He co-founded PayPal, was the first outside investor in Facebook, and built Palantir Technologies into one of the most influential data analytics firms working with governments and corporations. He's navigated the dot-com collapse, the 2008 financial crisis, the 2020 pandemic shock, and the volatile markets that followed. And through all of it, a consistent philosophy emerges. Thiel does not try to predict every crisis. He tries to survive and dominate after them. His strategy for economic chaos is not about hiding in cash or running to safety at the first sign of volatility. It is about building asymmetric positioning, placing yourself where upside dramatically outweighs downside when systems shake. To understand that, you have to understand how he thinks. Thiel famously argues that competition is for losers. In stable times, businesses compete aggressively in crowded markets, driving margins down. But during chaos, weak competitors disappear. Capital dries up. Talent becomes available. Entire industries reset. In his view, crisis is not just destruction, it is filtration. The question becomes, are you fragile or are you anti-fragile? One core element of Thiel's strategy is owning scarce, durable assets tied to long-term structural change rather than short-term economic cycles. That is why many of his investments focus on deep technology, defense technology, and frontier science, rather than consumer fads. During economic uncertainty, companies that solve essential problems, national security, data infrastructure, advanced computing, energy resilience, tend to maintain relevance. They may face volatility, but their core value proposition does not disappear when consumer spending dips. Contrast that with businesses built purely on cheap credit and speculative demand. When liquidity tightens, they suffer first. Thiel's worldview is shaped by the belief that we live in an era of stagnation masked by monetary stimulus. He has criticized the idea that low interest rates alone create real innovation. In his framework, easy money inflates asset prices but does not necessarily produce transformative technological breakthroughs. That belief shapes how he prepares for chaos. He does not rely on central banks to bail out bad positioning. He invests in companies that can survive even if capital becomes expensive. That is a major difference. When rates are near zero, weak companies can refinance endlessly. When rates rise and liquidity tightens, only businesses with strong balance sheets, defensible technology, and real cash flow endure. Another layer of Thiel's strategy is geopolitical awareness. He has repeatedly emphasized that the global order is shifting. Rising tensions between major powers, supply chain realignment, and technological decoupling create new economic realities. Companies dependent on frictionless globalization may face structural headwinds. Those aligned with national security priorities may benefit. This is one reason behind his early and sustained focus on defense-adjacent technology. In unstable geopolitical environments, governments increase spending on intelligence, cybersecurity, and strategic capabilities. That spending tends to persist regardless of consumer sentiment. Now here's where it gets more interesting. Thiel is also known for what you could call strategic pessimism. He often speaks about tail risks, low probability but high impact events, financial crises, political instability, currency debasement, institutional decay. Rather than dismissing these as unlikely, he treats them as scenarios worth preparing for. That preparation includes diversification beyond traditional financial assets. He has publicly expressed interest in assets like gold and cryptocurrencies, not as speculative gambles, but as hedges against systemic instability. Gold historically acts as a store of value during periods of monetary uncertainty. Bitcoin, in Thiel's view, represents a potential hedge against fiat currency debasement, a decentralized alternative if trust in monetary institutions weakens. You do not have to agree with that thesis to understand the logic. Hedge systemic risk with assets outside the traditional banking system. Let me ask you something. Let me ask you something. If inflation unexpectedly spikes again, if sovereign debt concerns intensify, or if currency volatility increases, what protects purchasing power? That is the question Thiel constantly circles back to. But survival in chaos is not only about assets, it is about mindset. Thiel believes in contrarian thinking, not for the sake of being different, but for identifying mispriced opportunities. During euphoric periods, markets overvalue optimism. During panic, they overvalue fear. If you can maintain clarity when others are emotional, you gain advantage. This mindset was visible after the dot-com crash. While many investors fled technology entirely, Thiel focused on building companies with clear revenue models and defensible moats. When capital markets recovered, those positioned correctly captured outsized returns. Economic chaos tends to compress time. Decisions that normally unfold over years happen in months. Weak business models collapse quickly. Strong ones consolidate power. Thiel's strategy is to be liquid and decisive when that compression occurs. Liquidity matters. In boom periods, investors often become fully allocated, chasing returns. But when crisis hits, opportunities appear, distressed valuations, strategic acquisitions, breakthrough technologies, starved of funding. If you're illiquid when that moment arrives, you cannot act. Thiel's venture strategy reflects this principle. Concentrate capital in a small number of high-conviction bets, but maintain the flexibility to double down during downturns. That is asymmetric thinking. Limited downside through structured investing, but massive upside if one bet reshapes an industry. Another element of his approach is long-time horizons. Economic chaos feels overwhelming in the short term. Markets swing wildly. Headlines scream crisis, but structural technological shifts often continue underneath the noise. Artificial intelligence, biotechnology, space technology, advanced energy systems. These trends do not vanish because GDP slows for 2 quarters. Thiel looks for sectors where exponential progress can outpace cyclical turbulence. And here's a powerful idea embedded in that. Technological acceleration can offset macro stagnation. If productivity breakthroughs emerge, they can reduce the burden of debt, expand economic output, and create new industries. But betting on that requires patience and tolerance for volatility. There's also a philosophical layer. Thiel believes modern institutions often drift toward incrementalism rather than bold problem solving. During stable periods, bureaucratic inertia dominates. During crises, radical change becomes possible. So chaos, paradoxically, can unlock innovation that was previously blocked. That is why some of his investments align with ambitious long-term visions rather than incremental upgrades. He's not positioning for mild recessions. He's positioning for regime shifts in technology, in geopolitics, in monetary systems. And here's where the strategy becomes most powerful. Surviving chaos is not about avoiding all risk. It is about choosing the right risks. Holding only cash during inflation erodes wealth. Leveraging excessively during tightening cycles invites collapse. Over-diversifying into mediocrity limits upside. Thiel's approach balances concentration with protection. High-conviction innovation bets paired with systemic hedges. Long-term vision paired with short-term liquidity. Geopolitical awareness paired with technological optimism. That duality is key. He is skeptical of institutions, yet optimistic about human ingenuity. He questions monetary policy, yet invests in technological breakthroughs. He anticipates disruption, yet seeks to benefit from it. Economic chaos exposes fragility, but it also reveals strength. If you study Thiel's career, you notice a pattern. He enters spaces others dismiss as fringe, stays patient while volatility shakes weaker participants out, and emerges when consensus shifts. That requires psychological endurance. Most investors fail not because their thesis was wrong, but because they could not withstand volatility long enough for it to play out. In turbulent times, narratives swing wildly. Fear dominates headlines. Policy shifts create confusion. Markets overreact. Thiel's strategy demands detachment from short-term noise. Focus on fundamentals, on technological inevitabilities, on structural incentives, and perhaps most importantly, on independence of thought. Because during economic chaos, herd behavior amplifies mistakes. If everyone believes rates will always fall, positioning becomes one-sided. If everyone believes globalization is permanent, supply chain shocks hit harder. If everyone assumes political stability, sudden polarization surprises markets. Contrarian preparation does not guarantee success, but it reduces vulnerability. So what does this mean for you? It means thinking beyond quarterly headlines. It means stress testing your assumptions. It means asking uncomfortable questions about debt, inflation, and geopolitical stability. It means developing skills aligned with future technological shifts. It means maintaining liquidity for unexpected opportunity. Peter Thiel's strategy for surviving economic chaos is not about predicting the exact year of the next crisis. It is about building a position that benefits from volatility instead of being destroyed by it. Because chaos does not eliminate value, it redistributes it. And those who prepare strategically, patiently, and independently are often the ones who inherit what others lose.